Hello, Maverick Traders. This is Rob Reinhold. It is September 21st, the day after the Fed meeting, and we are still feeling the effects of Jay Powell's press conference. In this session, we're going to be going over the review of the trading day. Today was a big day, big down day. We'll talk about all of the things that went into that. We'll take a look at the numbers, and then we're going to update our current market analysis. Things have definitely changed. We've gone from a sideways to now more of a bearish market. And as always, we're going to be looking at some trading setups and opportunities.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
The markets did not like what they heard from Chairman Powell. So let's talk about what exactly they heard. We heard from Chairman Powell that the economy is actually stronger than they expected. Now look, they kept rates as expected, but they said the market's doing pretty good, or the economy's doing pretty good. And when you took a look out in their projections, they actually projected they were going to start cutting rates in 2025. They took those off the table. So we saw basically a tightening of policy. Even though they didn't really tighten policy, all their dot plots said that they're going to be less accommodative in the future. So we see here the Dow was down 1%, S&P down 1.6%, the Q's down 1.3%, the Q's down 1.8%, the Russell down 1.5%. At one point, we went down about 1% in the morning, and then we recovered. We recovered about half of it, to where all of a sudden the market was looking pretty good. And then by the end of the day, it rolled over, and we closed on the absolute low. Oil was up. It didn't matter. Energy stocks still went down. Gold was down. And if we really take a look at the culprit here, it was the 10-year bond. We're going to take a look at the 10-year bond chart here in a second, and you're going to see it looks the exact opposite of the stock market. In the market, we had 4 out of 5 stocks went down today, and take a look at that above and below the 50-day moving average. The majority of the market is in a bearish market. It's just absolutely there, so we can't ignore that. Let's jump in and take a look at this S&P chart. Now, we were sitting in a range right between, two highs and lows. Low down here, high up here. And I was actually really surprised by this move today. In fact, I did our end of day video in our currency group, and I said, you know what? This looks like a nasty candle, but I still think that we're in this range. I still think we're going to stay in this range. I don't think anything's going to happen, and I think we're going to recover this move and just simply go sideways. That was my call yesterday, and that call was wrong. I have no problem at this point in my career, after 25 years, admitting when I'm wrong, because I've been wrong a lot. I've had a lot of practice at this. So look, I had an outlook that the market was going to stay sideways. It is not looking like that at the moment. Now, we did have a really nasty candle today, and you can see we are really at this support line. We're right there, and we go back. We've even got another support point back here. So we are at this support level. I think it's a little early to call that this is going to be a free fall. However, it's absolutely possible that we could get a free fall. So I think tomorrow's candle is going to be important. If tomorrow's candle can be an up candle, I think you can make the point that maybe we're still going to hold in this range, and maybe my sideways call is going to be okay in the end. But that being said, there's no question that the likelihood of thus going higher is gone. Is gone at the moment as far as breaking out above this 45.20 level. Anyone who is looking at this sideways pattern saying, hey, I think the next move is up, you've got to take that off the table. This market at best is going to bounce up and go sideways. That's best case scenario in my opinion. Worst case scenario is we break this level and we have one of those nasty September, Octobers again. Remember, these 6 weeks are the worst 6 weeks in the entire year, September 1st to October 15th. This is where most of the stock market crashes had happened. So tomorrow's candle is very important. If we can bounce up, I think you can still say we're sideways, but you have to get less bullish than you were just 3 days ago. If 3 days ago you were at a 0, I think you've got to be at least at a -1, if not a -2. I think you have to be leaning to the bearish side. Now, I have been at a 0. That's where my portfolio has been. I haven't really loved this move lower. I'm going to have to make some adjustments and changes if we do break down tomorrow to new lows. Let's take a look at the 10-year bond. And this is the real story here. The 10-year bond has broken out, and you can see that if it goes higher, this market is going to go lower. We're up here at 4.5%. This is multi-year highs here. This is what's putting all the pressure on the market. So tomorrow, if bond yields moderate, we could have an up candle tomorrow. As I said a couple of weeks ago, I think this is the story. The 10-year bond is the head of the dog, and the stock market is the tail. Whatever this bond does is what the tail is going to do. So keep an eye on bond rates. And we're going to switch over here to the heat map. There's nothing really to talk about. It is a sea of red. The only green is in defensive healthcare, and not even all that much, just the insurance companies. All the other stocks in the healthcare, they got creamed along with the rest of the market. Even like the utility sector, that is typically a defensive sector, it got creamed with the higher rates. This was just a really nasty red day to the downside. Let's jump into our market outlook. Now, our monthly outlook had been a 0. We are looking at this saying, okay, moving averages have been flat. Whenever moving averages are flat, we're going to be very close to a 0, maybe a +1, -1. We definitely have to reevaluate after these last 2 candles. We are definitely going to have to upgrade this, I guess it's going to be a downgrade this over the weekend in the trading room. If this holds tomorrow, and we get a bounce off this support line tomorrow, then we're going to move to a -1. If we don't hold this, we're going to move to a -2. So as I said earlier, if you are leaning slightly bullish, you're wrong. I was wrong. Just admit it. Okay, you know what? We have new data, new information. Let's make some adjustments, and let's get closer to -1, -2 in our portfolios based on what happens tomorrow. But there are still some great trading setups out there. Let's take a look at them.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Surprisingly, I found a good amount of bulls in both the energy sector and the materials sector. And here's one that is actually in the technology sector. Now, this stock got absolutely hammered. We had this downtrend in July, had an earnings miss. It got crushed. It got punished. And you can see it's been building this long base here. I don't know what the news was here, but the news was enough to get it out of this base. And here we are, we have now closed the gap. So if we're looking at gap strategies here, whenever we see a gap, we have a couple points here. This point where it broke the gap is key resistance here. And you can see it is holding that resistance. But take a look at this stock. It is stubborn, especially in the fact, take a look at the last 2 days. The market is tanked. No one is tanking on this one. This thing actually had an up candle today. So for me, I think it's just a matter of time until this resistance is broken. Here's the problem. There's a ton of overhead resistance. So I don't think you can get too bullish on this. I think 39, 41, those are some key points here. but I do think that you could do something mildly bullish here on AYX, something like a 35.40 diagonal call spread. If they've got like a 37.50, a 35, 37.50 vertical spread. I mean, there's a lot of things you can do here. I don't think you want to be super bullish on anything here. The market's not telling you to be that way. But here's a stock that's acting really well at a key resistance point. Let's go take a look at a sideways stock. Here we have Kroger. Now, this is the kind of stuff we want to take a look for when we're looking for sideways stuff. When we have a lot of volatility and the markets are going crazy, you don't want to try to do a sideways trade on Tesla. I mean, that's volatility only makes those things get crazier. The chance of you calling a butterfly or a condor on a high volatility stock is about zero. So we want to ratchet down the volatility. We say, okay, what are the stocks that typically are more safe in times of stress? And here we have Kroger, a supermarket company. We're saying, okay, where is this likely to go? It is more down than up. We got moving averages headed lower. So we definitely want to be more bearish than bullish. I really like this 45. I think this 45 looks good. And I think if you go up to like the 47.50, 45, 42.50, I think this is the area for the butterfly here. This profit window right in here. If it does break below support, that's going to be some trouble on the butterfly. But if it holds that support, that's going to be a nice little trade here on a butterfly on Kroger. And on the short side, we got Hewlett Packard. This thing's looking really terrible, and it's looking terrible well before the market looked terrible. So we came down, we based, we had earnings, terrible. We rallied up, filled the gap, turned right back down, broke through this level, more bad news. As you can see, this thing cannot catch a bid whatsoever, and we're looking to break to new lows. I don't want to be super bearish here. This is Hewlett Packard. It's not a fast mover. I think 25 is about the lowest you can go on this. I'm not even going to go to 25. I'm going to go to 26. So I'm just looking at a 26, 27 bear call spread. It's a pretty wimpy trade, but that's fine. This would be a nice little single or a double. We can add this to our gains and move on from there. Let's talk about wrapping this up and what's likely to happen tomorrow. We did close on our lows. We are likely to get some overseas selling in Asia. We're likely to get some overseas selling in Europe, and that's likely going to put some pressure on the futures in the morning. I fully expect we will gap down probably around 0.3, maybe 0.6%, somewhere around there. Then we'll have to wait and see what happens. We are at that support level, and we could see a bounce tomorrow. We could. Now, it is a Friday, so we could see a continuous sell-off. Whatever happens tomorrow is going to be the determining factor of whether I am a -1 or a -2 going into the weekend. There is no possibility of me being a +1 or even a 0 at this point. The market has spoken. I was at a 0. I was very confident with my 0. The market showed me that I was wrong. I need to make adjustments. So we'll have to see what happens tomorrow on Friday. Flash manufacturing PMI, that's not a big report. You can go ahead and ignore that. The bond market is going to dictate what happens tomorrow. So keep an eye on that 10-year bond. If it goes higher, we are going to break lower. If it moderates, we could see a little bit of a bounce tomorrow. That is the Market Roundup. Thanks for joining me. Goodbye, everybody.